Tuesday, June 1st, 08:49 a.m. New York time. Good morning. Yep, first day of new month. My last trade was last night. I did a day trade. It was in the futures market during the Asian session. I traded the interest rates. Yep, you could do that if you have an account with a futures broker that gives you access to that exchange, which was the Chicago Mercantile Exchange. So we're looking here on the future symbol /10, that's 1010Y. Yep, the 10-year yield. Looking at a daily chart. Look at that. The trend's been going higher. Yields going higher. Correlation, interest rates go higher. And the current trend is down. This is now, but that's not what it looked like last night. Last night we were above, but now it's doing a deep retracement down here. Broke below the low of yesterday and doing 50% of this upward orange trend, 50% of it already. So let's see what my trade setup was. I was looking here on the 4-hour chart. Yep. See these areas, this gray horizontal line. Every time it came up here, it rejected it. So that's a sailing supply zone. Some people call it different names, but the fact is, prices rejected it, sold off. As it kept on hitting it, it's making it weaker, cracking it to break through. It broke through. Broke through. So my thought was, on a retest down here, look for a possible bounce. A bounce. It might bounce a little bit, halfway, all the way up here. See that orange, purple line? Yeah, orange. Hello, purple line it is. That was potential area I was looking for to go to. Zoom in. This is the 4-hour chart. So see that 4-hour candle right here, that long shadow on the bottom? Bullish pin bar, the bottom of a trend. I'm thinking, yep, we're going to have a break above that, break above that. That's where I'll look to go long. Maybe I'll even go long sooner. Yeah, you see it's selling off right now? Selling off. But so this point was bullish pin bar, inside candle. And my thought was, again, that big number, 365, 360, these numbers, that I'm going to do a bullish trade. But because I was doing it overnight, I'm not looking for it to go all the way up here. No, I would have done a swing trade using options. That would be the second part of this video. Another trade setup using options on a stock ETF. Yep. So let's take this. Look at this. It's breaking down more. But again, this could change between now and the close of today. This candle will get done at 9 a.m., that 4-hour candle. Let's go intraday, further intraday. On the 1 hour. Yep. Oh, I went long here. That was 9:18. And my working order, I physically closed it. Well, no, I adjusted it. So I closed it here. Yep. Made gains. So my thought was, well, this is the 1-hour chart. That 4-hour pin bar I saw, I like this. There was this, and then this one formed. As soon as this one got done, look, higher lows, big wicks at the bottom. Buyers were stepping in, defending it. Broke above. Once this did that breakout, I did it. I went long. And my initial target was up here, 3.7. Yep. Let me show you on the 4-hour. 3.7. So I'm thinking, yep. Consolidation area, breakdown. Maybe we'll come up to 3.7. But I'm thinking that's a lot overnight to make that occur. So after I got in, here, my stop was right here. I put my stop on just slightly below that low of yesterday. Giving it a little breathing way, just in case if it tests it. Sometimes it does test. Maybe I won't get stopped out. And then after I got in the trade, I'm thinking, yeah, this is an area to be concerned about. That biggest stop hunt. It was a bearish stop hunt. So I'm thinking, yeah, but may not even do all retests. I'll just target somewhere around this area. And that's what I did. I took this, moved it down, moved my stop, and I closed here. As soon as I closed it, a little bit later, it pushed higher, higher, higher. I'm like, I left a lot of money on the table. I'm too generous. Well, then I shut down the phone, went to sleep. But then look what happened. It retested most of this and failed to go higher and then rolled over You can see right now it's selling lower. So if I'd stayed in the trade, even now to try to go to the original target, I would be losing already stopped out. So good job out of my money management, taking profits, leaving some money on the table for the other people. Shameful, shameful. Wink, wink. Greed is good, right? Yeah, hello. Yep, so then. And if I was awake, maybe I would have gone bearish and make this big move now. So again, that was during the Asian session, much slower activity. Then you have the European session, and now you have the New York session. Yep, the New York session. Let's go look. The next, let's put this on the 15 minutes to show you something else. On the 15 minutes. So this financial instrument overnight is not a big trader. That's why, again, I use using the 1 hour. It's very thinly traded overnight. Again, it's better liquidity than all the other yield financial instruments that I find. So I choose this one. But again, overnights, I'll have it on the higher time frame to look for areas. So again, this area, this was the area I closed it at, I said. But again, you saw it more clear on the higher time frame. Look at that, it's still selling off more. That's the 10-year yield. Again, yields go lower, interest rates go lower. But again, this is just short-term news that's doing this. Don't be fooled thinking it would stay like this on and on. Excuse me. Yep. So again, this area, I just showed you green. Now let's go look at the next trade idea. That trade idea is using the stock ETF TLT. TLT trades inverse from the yields. Yields go higher, interest rates go higher. These bonds go lower. Okay, when we're looking at a daily chart, you could trade the stock, you could trade the options. Well, look what's occurring here. Consolidation, breakout, consolidation, breakout, consolidation, breakout. This is a channel. Used to do this a lot on old stocks. Something called, you may not remember, a bank called WAMU, which was originally called Washington Mutual. Also used to do this on Wells Fargo. And I think it was Winnebago and some other ones for years back in the, before the dot-com bubble, before 2000. Yep. Back in the late 90s when I was doing this, with a lot of these channels, great things for trading this. Wells Fargo is one of the main go-to ones I used to do this. All right, let's not talk about my history. Well, look here. 3 times it tested this. So now, look at this test. I was thinking doing bull put spreads here, and I didn't do it a few days ago. Shame on me, because I already would have profits, bull put spreads, profit gains, because you don't have profits till you close the trade. I would have already had gains. So now I'm wondering, maybe it's going to go up here on weakness. If it goes here on weakness and reverses, maybe it's going to break through here finally. So maybe I'll be doing bear call spreads up here. Or maybe I might just say, hey, you know what? Let me just do this. I'll do pull put spreads with strikes below here and see if we're going to get up here. That's maybe. Yep. So what I do is go to the option trade chain. Trade. This is option chain. Swing trade. I'm looking for options nearest 45 days. This one expires 43 days. That's good. That's the 14th July. Open up option chain. Depending if I'm bullish or bearish, let's just say I'm bullish, then I could do the bull put spreads where right now this does not open until 9:30, so there's no prices to bid and ask. And let's go back here. Here's $100. So if I'm bullish, I want to do a strike below that, maybe just slightly below this zone. Vice versa. If I'm bearish, maybe one up here, maybe 105. So I'll show you an example of both. To the 100, the spreads. So my short strike would be the 100. My buy one, go down. Oops, where's it? Right there. That's 5 strikes wide. If I want to go wider, it's 10 strikes wide. If I want to go 1 strike wide, 99. Again, the market's not open yet for equities. And then whatever I do, I want to click the minimum of $30 if I do one strike wide. Let's go look at the bear call spreads now on the 105. There we go, 110. So 5 strikes wide. So my short strike would be 105, my long would be 110, and I would collect that premium. Let's close this and go back here. So again, I'm going to be looking at this. Doesn't mean I'll put the trade on today. I might have to sit on hands for a few more days and see how things look based on the closer to the daily candles. Again, this does not trade all night long. It's the futures I just showed you, which we'll finish this here. It's now 9 a.m., 0900 a.m. for you civilians, New York time. The 4-hour candle is done. This is done. Big bearish candle. So if I was to day trade this today, which I may, I'll be looking for a retracement on here, on a retracement, and on weakness, I look to trade short. Look at that, already broke below that. Yep. Let's look on the daily. Maybe we're going to go all the way down here, 0.618. That being said, if you notice here, we're already below the low of yesterday. So what will happen during the cash market here, if that stays, that future stays below the low of yesterday, 9:30 a.m. open, then this will gap up. See how these gaps occur here. Okay, I'm going to end here.